Everybody, welcome to March 19th, 2026 PPT coaching call. We're going to get right into it. We before this confirmed breakdown a couple days ago, we had price up here testing this trend line, and while most people were focused on, okay, here's a balanced breakout pattern, we are thinking contextually. We're thinking differently, and we are weighing how this momentum alleged breakout is looking in relation to the larger time frames, which when we'll show you this on a larger time frame chart that we are still in a bear market. So technically any breakout is higher odds to be a false breakout than a breakout. And we are still in a bear market. And then we can just zoom out and we'll show you that for Bitcoin's entire history. But just looking even on the daily chart, where this is like multiple months here, you're still not going to see it. The only way I was able to execute this idea was looking at the larger, bigger picture, because that's really where we are. Now, if we let's see here for a second. If we zoom out a little bit, we can see just how patterns repeat. This is an exact clone of this. It's the same degree. It's even the same length. So, you know what I mean? So you could see that what happens technically, right, when you get this false breakout, when you have these rising wedges, you have what I'll show you on this other chart here. A little bit of an internet slowdown here. Sorry for that. Let me stop the share for a minute. Okay, we're back. I didn't disconnect it, reconnect it, but we're back. So I showed you on the other chart of the daily that how, this rising wedge and this rising wedge on these two legs down were the same degree. Now on this chart, what I've shown you is the other factor of the rising wedge, which is this volatility contraction as it's making higher highs, and everyone's focused on this intermediate time frame, which I even marked as neutral bullish before we broke down here, because obviously bullish the last couple of days, neutral bullish, intermediate time frame, zoom out 1 to 3 months, we're still in a downtrend. So boom, right? The rising wedge says that it's going to fail and that it could break out of this. I don't know if it'll come up a little bit more and go up tomorrow and go down. What I basically said as it touched this support zone, I gave this right before it even happened. I'm thinking ahead about tonight. I said if it closes with a buying tail like it is now, which is why you notice I took 25% off my short, that it could produce a green day. We might actually start, this rising wedge might continue. But if this is a true downtrend day, which it does have lower odds to be a downtrend today, because simply by the fact that we had a downtrend day yesterday and we have only 107% relative volume, that's average. Not that you can't have a trend on average, you want to see it above. Oh, I guess I'm not sharing the screen yet. Hang on a second. Sorry about that. Okay, good. How's that? There we go. Thanks for letting me know. I'm sorry, I forgot. I turned the screen off because the internet got slow there for a minute. Okay, good. So the screen's back. So I switched to this chart. I'll just go back in time.
Thanks.
Yep, no worries. Because on the previous one, I showed you how these were clones of this rising wedge. But now that we've gotten the false breakdown confirmation, you can see now the other aspect of the rising wedge, which is the support of it. And as soon as it hit this support, that's when I got out of my short and said, I'm thinking ahead that if it closes below this, then it becomes that breakdown. But if it closes with any kind of a buying tail, and I already saw this in the making, this is an inverse zero line reject. When this CCI can't get over the zero line, but the yellow turbo does, oops, I don't know why my internet is so bad today. You can see, I don't know if you can still see it, but when this goes orange like this, it slows down. So what I'm going to do is I'm just going to disconnect and then connect for a second. And then connect. Okay, hopefully everyone's still there. Um, if you can still hear me, maybe give me a thumbs up in the chat. Okay,
Yeah, I can hear you. Thanks.
yep. So that's why I got out of the short, because this could technically, with this inverse zero line reject and hitting the bottom of this, this rising wedge pattern could still keep going up, where we could even get a couple of green days. The idea is that it goes up and then it breaks, but it's very uncannily similar to when we had that strong final. But we did take out. You know what I mean? We're still right. If we clone this one a little bit, this contracted up to as well. I mean, this is even a little bit more exaggerated with that. So, it's all about risk reward. That's why we reduced the risk on the short side when we took some profits. Let's go take a look at that. But the idea is that if this does break, the pattern is that we're going to have another leg down. And I think that's definitely going to be the pattern at play. Um, and I'll show you that zooming out. So yeah, we took 25% off around here, which is fine. Our stops to break even. This was the pullback that I mentioned yesterday that we were going to get in on at around 38.2%. Staying positive, you caught a really nice move here, rather than if say, oh, I didn't short here, I almost shorted there, and look what you could get into that type of a mood where you say, hey, I can't believe I knew that this was going to happen, but I didn't take it. For example, if you go back in the channel, I talked about how this dotted zone is a bull bear zone. They're automatic entries. So technically, even though this was a bullish day, towards the end of the next day, that was a short setup right there that I should have took. And that would have been, the awesomest trade. And I did see it. And that's why the next day I was tempted to short here and here, even though the high a day was here. But because you had this sort of flag, this selling tail pattern, and it's so near a strong zone, that's when you can kind of get aggressive. Um, Even so, if I still waited into the next day, I saw this in the morning and I was like, I should short this. It's now at the high extreme of the current day, so I have no excuse. Whereas here, I had a resting order up here, right? So, a little bit of perfectionist, a little bit of analysis by paralysis, but the main reason I didn't take this at 2,300 hours is that I was tired. It's near midnight my time, so there's that. But then you can see how this predict. You have to get aggressive no matter what. I knew this was going to happen based on my system, but the execution of it requires a sort of grit and grind, because it's counterintuitive. Everyone sentimentally was feeling that this was the bad move. Nobody was talking in the channel hardly at all. If you go on the news, if you go what other channels were talking about, this they're talking about it. We went down 50%, a great place to buy. It's hard to follow your system, but my system is accurate, as you can see. It did predict this move, right? So, all right, you wake up, and I think even at this moment in time, I said we're not going long here. The next setup would have been this balance breakdown setup, but I'm not a big fan of those. I am a fan, however, of a pullback continuation. I'm comfortable with taking those when we have so much strength and we come back up early enough in the day, right? There was me getting ready to position into the next day, which is what happened. Now we're in a situation where obviously since about 11:30, the bulls seem like they've had a small rally, but the same thing might happen again where, we could have sellers step in here, let alone at the high of the day, because there was so much of an exaggeration. For example, the even though the bulls are making a rally here, if you shorted here, okay, you might say the sustained momentum's against you because it popped up, but really the intraday bias is still bearish. I'm not saying to short that. It's not a setup I'm taking. It's not a setup, but it's the idea that the intraday bias is still bearish on the day, as you can see across the board. So why am I able to predict ahead of time that these are false breakouts instead of breakouts? Well, if we go back in time, it's really plain to see that never in Bitcoin's history has there never been a period of a bear market that was red. And the other thing that you can notice too is that the greater the bull market, the longer, the longer the green, the longer the red, because for every action there should be a reaction proportionally. Now you can see the greens typically have been longer than reds. That's fine in an emerging market. But when have we ever not had any red? And uncannily, just like after the two double tops here, once we remember the bull market has to stay above the Gaussian channel. When we break through it with conviction, especially this meridian line, that's a huge signal. That's why I was able to tell people, hey, 95 to 98 is the last chance to get out near 100 because this was acting as resistance up here when I said it, much in the same way this was. Now we have broken the first, in my opinion, standard deviation down, leg down from it. And keep in mind, as this was happening, this channel was still green in here. During all this, it was still green, and everyone thought that the bottom was in. Keep in mind, all this is happening, and it's still been green, and everyone's talking about how the bottom's in. But now, notice on this false breakout, as it's coming up and looking like a breakout pattern, it flashed red. I think if you go into the channel, I mentioned that a couple of days ago. It flashed red. Well, it flashed red as well here, because as this is coming up, you only get a little red sliver here. So we're in that red sliver and we're in that red sliver. But then what happens after the red sliver? You have a mega crash down significantly. This is like a 50% move. That's a lot more coins to buy. Okay. Then once we break down in here, we go into the portfolio reload zone with the idea that the lows could be in. But from a time perspective, we could be going sideways for a while, which, on this first leg down, this will be harder to buy in this zone here from an emotional point of view, because a lot of the folks that went all in here won't have the guts to go in here because that's that dollar cost average strategy where it's the opposite of what we do as traders, where we're not taking on more risk when we lose. Like they're still holding here, they dollar cost average here because it's 50% off here. But we're thinking a little bit more differently here. Also, as this was popping up, as this was flashing red, we had a huge inverse zero line reject. Right? And look at the same inverse zero line reject we have today. So patterns repeat themselves. Remember, all this is happening after the bull market has ended because we were above the Gaussian channel. Now we're below it. And it's like it seems to behave in a way below it that is reasonable based on its past history, that we can assume that there is going to be a little bit longer of a bear market. Now, the good news is that if you go into the other times this has happened, we can take a look at it. Right here, see how it broke the Gaussian channel? It needed this maturity in the red, you know what I mean? It didn't just happen on the first sliver here. I thought maybe okay, good. I thought maybe I was got disconnected here. See, if I stay away from the office here for a couple of days and I turn all the computers off, this powerful one, the Katana, actually has trouble connecting more than the HP one, which is older, which is kind of weird. But anyway, what I was saying is that even we can go back and since 2018 in the maturity, right? When the first sliver of red, everyone will be buying here, but it needs the maturity of it. That's that violent leg down. So this next leg down, based on Bitcoin's past history, here, same thing happened here. First leg down, the first sliver of red, and then it gets violent. This thing needs to mature, just like this needed to mature, and just like this needs to mature. It's not going to feel good to buy, just like it didn't feel good to sell on these because all this hoping. But remember, the bull market has to stay above this, and it didn't. We also made a double top and then broke below it, popped back into the meridian line, and first leg down. So we could have a leg or two down, and this crash could happen really soon. If we go back and count the days when it popped up into the meridian line from here to the low, we can count the number of weeks. I mean, even let's say we're from here. It's like 1, 2, 3, 4, 5 weeks. That's like 30 something days, right? So we're talking.
Sorry, would it be possible to share a screen again?
Oh,
Only
yeah,
if
I'm
the
sorry.
connection allows it.
I'm sorry. Let me do that.
Hmm.
Let me go back.
Thanks.
Yep. So going back, right? Every time, what I was saying is that this sliver just started, then we popped back up. That sliver just started. Then it needs to mature. There's always and this might not look on these past history because it's not as big as this big move we had here visually, but the proportion, all right, is 50%. I mean, it's huge. So if we take maybe 50% goes from 76, half of that, what, 30, 35? So maybe it goes, let's say I
I
have,
have one question for the weekly and the monthly charts. Do you sometimes use a algorithmic, so logarithmic chart that you can see the lows and the highs in the previous times a little bit better?
I really
Or
don't
do
mess.
you never use it?
I've never ever used a log chart. I mean, I've never had anyone
Mhm. Oh, right. Okay.
show me how to use it in my system, but I mean, I'm open to if it's going to help. I'll like this
No,
Gaussian
no,
channel.
it's just helping for the previous to 2010 and the 15,
Oh yeah, it'll
so
probably
you
make
can
it.
see it in
Yeah,
context.
yeah. I don't have to
Yeah.
zoom out like this, but I mean, up here too, right? The bull market happens; it's above the Gaussian channel. When it breaks below, the pattern is so crazily repeatable. Pops back up, and then that first sliver happens here, and then it needs that violent leg down. I mean, this went from 478 down to 157. I mean, that's a significant drop. That's a lot more coins, percent wise. And then, like I said, what could happen is if we could get that at the end of March, early April, where we get that first leg down, and then possibly end of April, early May, like my Bitcoin time cycle chart shows, we get like a double bottom. But I'm going to give the signal for the portfolio in here. I mean, if we have to sit through a little bit of sideways action, it doesn't matter. I want us to be very aggressive, getting really good prices. But you know what I mean? I wasn't because that, like it happens. The low happens very quickly, but then the sideways takes a while. So if we go back over here, this low happens pretty quickly, right? And then the sideways happen. Now, granted, if you were really patient, right, there's a little bit more of a low from like 3,000 down to high 3,000, mid 3,000 down to low 3,000. But I'm not going to care about trying to get the absolute low for the portfolio. I'm very patient right now because of the context of where we are in the channel. But once we get this next leg down, based on what it's done in the past, you can see the same thing happened up here. First started to get red up here where we are. Now we're kind of right here. Then it gets, so I'm not going to care if we reload here versus being patient, sitting through all this and trying to get that, even though I know that might happen. I'm not going to care about that. If you're trading, we'll be aware of the sideways phase. There's always been a sideways phase because we know that like markets go up, then they go sideways, then they go down, then they go sideways, and then they go up. And if we're aware of that time cycle from a larger perspective and just memorize that, right? They go up, sideways, they go up, right? Then they go sideways, double top, then they go down, and then they go sideways, and then they go up. Because it's just that's what the market needs. It needs that rest. So that's this chart and another chart I'll show you are some of the higher time frame reasons why I'm able to understand that while this you see how this you might say, well, isn't this the same pattern? It was this breakout pattern. Isn't how are you seeing this breakout? I mean, this is on the weekly for one, but on the daily it would look sort of similar. I can go into the fact that these were more level and there was a stronger move out of it and all that, but it's happening in the context of above the Gaussian channel. The bull market's still there. This is happening below the Gaussian channel. The bull market is done. We're in a bear market. And it's counterintuitive, but that's where we're at. And we save that. Then I'll go to this weekly one. Now the Gaussian channel shows something very similar that these death crosses do. I can show different death crosses on different time frames. Usually I'm using the 200 and the 50. I believe this one is the 50 and the 21 is another one people use, 50 and the 21. It's fine. We'll look at them from different ways. They both give a really good signal. Same thing. We're not in the Gaussian channel anymore, but the idea is that, once that death cross happens, the two moving averages, we're in a bear market, they need time to separate. This X represents the beginning of a death cross. This X represents the beginning of this death cross. And it's like we just started it. It's like these just separated. So it's like we're at this first leg down up is where this new separation is, but then it needs that more separation time. Very similar to this. Just started to separate some more, and now we're popped back up into it. Once again, an amazing inverse zero line reject on the weekly. These indicators, they're very you can get if you read them too literally, you'll get tricky. You're saying, oh, blue's above red, that's bullish. Well, if you go in the past many times, it's just chopped around this area and didn't really give any kind of useful RSI. So I'm not so much of a fan of this RSI right now. And then of course, this momentum RSI still says we're in a bear. And I don't take these too seriously as compared to what the CCI really can help you with this momentum thing. And then, of course, the death cross in the Gaussian channel trade location where we are, how we went through it very quickly. Now we're below it. And below the death crosses now. What's going to happen is that you can see once we had the death cross, one leg down, two leg down, three leg down, we're going to get in here. That's going to require faith. What someone who doesn't have faith would do would be to wait for the antithesis of the death cross, which is the golden cross pattern. They would then buy once this orange crossed above the blue, they'd wait for this. Now, the benefit of that is that you're in a trend. You're going to see your market go up a lot. You're not going to struggle. But the downside is that you didn't get a great price, in my opinion. I mean, you waited for confirmation. That's okay, though. I mean, you didn't lose. But we're going to try to go in on the fear, max fear for our portfolio. But max fear in the right context, not like in the beginning of it or the mid of it, but when we think it's about to go into a sideways phase because the down phase is now exhausted. So certain things we'll look for is another, violent leg down, which just from a multiple leg count perspective, your leg count on your daily call. If you're looking at the daily, would start to show that it's getting exhausted if we get that other leg count down. Then you want to look for like price patterns, like bottom buildings and multiple sideways actions. But don't be afraid in this next leg. This isn't necessarily for a trader who's going to fade against a downtrend and catch a falling knife, but for an investor, don't be afraid on this one to buy on max fear and pain. When the news says we're done, Bitcoin's over, and when what's that guy, Max Kellerman? Not Max Kellerman. The Kramer guy. When the Kramer comes on and says Bitcoin's done, right? I wouldn't be surprised if, so yeah, that's what we have to ignore. Just like right now, the sentiment is we're building a shelf, it's going to go up, and it's optimistic. And I think Michael Saylor sways a lot of people. Sometimes I don't get, like, he could hire the best analyst in the world, but yet he just always is in this this eternal bull market mode. And eventually the Ponzi scheme is going to end. And it's like if someone ever pulls the plug and calls in all his loans, I mean, he's basically created a fractional reserve Bitcoin, which is not in the spirit of what we wanted to do. So, but because we have the truth in the charts, we can make intelligent decisions about what we're going to do with our money, and we're going to make a lot more money by being patient. I'm trying to get on the daily here. Save it. Go here. Let me just stop sharing for 1 sec. There we go. Yeah, the shares is what's clogging it up, but it's not anything. I mean, usually if I have this computer running nonstop for a couple of days, it's fine. It just takes a minute to get going. I don't know why. So yeah, I mean, that's the context that we're in. You can see how we need to go farther out. If you're just looking at, oh my God, price is going higher. I saw it go from 60 to 76. That's a huge, nearly 30% move or something. Then you're going to just Jones into it and FOMO. But if you realize that swing is, we had a similar swing here. And if we go back in time, after the death cross, it was a similar, this is from 26 to up to like 32 something. So, or 32. That's also a significant percentage. You can do, I think it's like math on it, maybe over 25, 26%. So that's what people are feeling, but that's why you need a multiple time frame approach. You're only looking at one time frame. And that time frame is then going to behave in a certain context to the larger time frame above it, like those Russian dolls. And you keep pulling them up and there's more and more dolls. That's what you have to do. You have to go to the largest doll on the largest time frame and then see if we're aligned on, and then get them all in a line. Now, patience is important because once a lot of these bigger picture things get aligned, then we can get really aggressive on this. We'll feel more confident holding. We're going to get a better. I mean, I think this next leg could get down another 50% from here. So we're talking like in the 40s to 35. I mean, I was thinking, it could, we're in a node now, but if it did break one more leg down, then it would start to build structure around this area where you could see like those key swings, and maybe buyers will start coming in around 48. But if we go and what it did in the past, it went from around 30 to 15. That's 50%. So from the highs here of 76, I don't think it was from the lows. But I mean, it wouldn't be crazy to think it could be in the 40s. That would be on the lower end. I'm going to watch how the price behaves and the magnitude of what we think it can do, because this was a significant down leg. That once you have a move of that magnitude that broke this key structure, especially when this 200 was no longer holding here, that was also the hint, right? That was the real area right here to get out of. I mean, my system said to get out up here because there was a triple top, and we sell on strength. And the leg count from the beginning of the trend when we started to reload was super maxed out. And we know that when things start to get bullish at the end of a leg count, that's usually a sign of exhaustion. Notice that these candles up here were a lot larger green ones than the beginning ones that we had down up here. So when you see larger green candles at the end of a move leg count, that's usually the end of it. So that's how we're prepared. Now, emotionally, psychologically, it's very difficult to be the contrarian right now because it doesn't, everything in the body, when it starts going up, like, oh my God, what if this one's wrong? It's like sometimes you have trouble sleeping, digestion gets messed up. But, if you can calm down, and that's why I'm always thinking ahead so I'm never rattled. Like, I'm not rattled now that this popped up here. Oh my God, because I took 25% off and I'm potentially aware that this could also be a green day, so that all of a sudden I don't start to panic because, oh my God, what if this thesis is wrong? Because at some point, the idea that I'm postulating here could become invalidated. You don't want to get married to any one idea. You just have to filter everything through your system, see where the high probability event is, the mid probability and the lower probability event, and then go with the higher probability event till it's invalidated, and then you would reassess. So if this broke this with strong momentum up, then I was going to reassess and then classify this now as a short squeeze, and now we're going to have a stronger rally up maybe into the 90s, mid 90s. But we didn't get that, right? And the heads up was, this candlestick pattern when we closed, like I said, below the trend line a couple days ago, slight overshoot back under the trend line. That is what I call a false breakout pattern, bigger picture pattern. It's a very powerful pattern. A false breakout pattern is very significant because it then has good odds to go to the lows of the balance. You see, we went to the lows, at least of this trend line, because it's more than just a balance. We're actually more sophisticated here. We're going to say within that balance of a breakout or a false breakout is this rising wedge or the bear flag, so to speak. So that's what this is. It's a classic bear flag or rising wedge or false break, all these different terms. I like to use different terms for this type of thing because I think they're slightly talking about different things. But that's the idea. I mean, these bigger picture patterns are what's super going to determine who's in control. And then if you think about it from, like I said, the multiple time frame perspective of who's in control of the day, and then who's in control of the short term, the intermediate, and the big picture, that's going to help you. Those last three are going to help you determine the larger time frame buys. So still like to get this a confirmed would need to break the trend line with some momentum. Then then it's looking like I said, like right here, that bearish wedge. And this was actually more of a heads up because you can see it was kind of getting that rising wedge squeeze and then breaking that, popping, and then we broke that. That was kind of the heads up that, okay, this is now going to have that leg down. So yeah, but if the bulls defend this, like I said, at least short term, we have this zero line reject, which is a bullish setup, right? We have a little bit of this, but the market closes in 3 hours, not right now. Let's just take a look at what the lower time frame price action is looking like, so we can get maybe a gauge of how likely it is to close with that hammer or not, or maybe even in the green. Let's see. I'll just stop the share for a minute. Yeah, goes quicker. Then I'll reshare it. Okay. Just as a side note, right? We had the trend down and then we balanced for quite a while, at least from a day trader's perspective, right? And then if you go from the highs to the lows of the balance and you clone it, you can see that's usually when the trend ends, at least short term, right? We had another leg down, and then when it got around here, that's when I took 25% off. Not only, for a couple of, for the reason that it was at a key support zone, or at least above it. You see how I drew this high volume node here? That was my heads up. But also because it moved 100% of the range, and then we had, quite a move back up into it. Knowing those things, that we have a strong support zone, I wasn't tempted to do an add-on at this VWAP or anything. Now, what's happening right now? Are the bulls in control? Let's see. Well, if the day opened here and we're still here, technically the bears are still in control. Not by a lot. Like I said, it had low odds to be a downtrend day. Like yesterday, it had high odds to be more of a downtrend day, just because of the fact that it was the first downtrend coming from a key zone up here, where we balanced for a while and then broke down. So it had good odds, and it went down so strong. We didn't get that second leg down within the day, but we definitely got that second leg down today. So I'm glad I caught that yesterday. Now I'm in a position where my stop is up here, or I moved my stop to break even when before it was above the VWAP. If it gets taken out, it does, but there's a good shot though that the bulls, and I'm going to get rid of this zone because it's not telling me much right now. We kind of traded around it, so it's done. You can see the VWAP is an indicator that's good on directional days. But even though this isn't a directional, like sustained momentum down day, it's an intraday bias bear day for sure. It's a sideways to down. When we popped back up into it, you can see the standard deviation away from the VWAP, which is this shade here, is still kind of holding. But technically, right, it's the high day is still up here. And until that's broken, the bears still have the intraday bias edge on their side for today. What could happen is that if it does fail here and then starts to go down a little bit more and close near the close, then that does reignite the potentiality that we could get more downside conviction, which I said, show you, would then confirm that rising wedge bearish breakdown, which would then increase the odds big time that we're going to go down another leg violently. But until that time does, I'm always thinking, what's the bias changing or bias confirming zone? Then who's in control around it? When price came up here to these two dotted lines, if I show you what that is in time, that was a key zone that was going to either produce the short squeeze or not. One sec. And then I'll share it again. When it came up here, right, what was that? How did we know to draw that ahead of time? I'm sorry, up here. It's very simple, right? We had a huge move down. We went sideways, came down here, and then we popped back up here. That is the last key pullback before the launching point of directional conviction of a major down move trend. This is a huge move. So knowing that this is defined as a bull bear zone, you could have as soon as it touches anywhere near the zone, the beginning of it, middle of it, end of it, you short it. That's what my system says to do because of how it's defined. And that's been defended. Now that strong move then pushed us back underneath this balance, where every time we did come underneath this balance, there was the potential to go lower, even though, like I said, we've been having higher highs and higher lows because of this thing called a rising wedge. But like I said, it's this it's a rising wedge rather than a breakout pattern because of the context of what I showed you guys on the higher time frames, the weekly, 3 day, with the death cross, with the Gaussian channel behavior, where we are from a trade location perspective and time cycle perspective, that these are more likely to be fake outs than actual sustained upside rally. So don't be faked out by the noise. Patience is a skill in trading. That's why I also posted for everyone the trader patience mantra so we can work on our psychology. I was listening to that today as well. And I think there's going to be great opportunities once Bitcoin gets this level and there's bargain prices. You'll see maybe even people start scooping up altcoins. Maybe we can have an alt season later on down the road as well this year. But until that time comes, until we resolve where we are uh, in relation to where we are in the Gaussian channel and the death crosses, reloading right now poses an extra risk because every single time in Bitcoin's history that we've behaved this way around this time, there's been a major crash. So we don't want to be on the wrong side of that probability. So I guess right now I'll open it up. We have two members, or maybe it's just one person for one thing. But if anyone has any questions, now's a good time. I'll open the floor up for any trade questions. Well, if you want,
I'm
oh,
online. Yeah, sorry.
I thought I just was going to tell you you're muted. No worries.
I'm online with two devices, with a mobile phone and with my PC.
Okay, so is it not a good time? Because
I
I can
have
go over some of your
specific questions because your connection is very, very bad. I hope I can watch
the replay.
and hope that your language is in a better quality there because I have and I was let's say every second word was missing.
Oh my God, I
To be
didn't know that.
honest,
I'm sorry about that.
yeah.
Well, thanks for letting me know. I guess what I'm going to do next week to prevent this is I'm just going to have this computer running because it seems if I take a day off from having it on, it's shaky on the connection. It's just funny right now. It's showing like 4 out of 5, then it goes to 3, then it goes to 4, and then sometimes it goes off. But
Hmm.
little funky here. The other thing I could do is I could just use my other computers, which don't have that problem. That's what I'll do. Yeah, that was the mistake I made. I'll just make sure I use the HP one that right next door here. So yeah, I hope the record of it. But maybe you could hear me speak a little bit. I showed you some of those charts. I just wanted to say that the ability to call some of these as false breakouts rather than breakouts is because of like where how it's behaving as a breakout. In relation to that Gaussian channel, like we're below it. There's a death cross, obviously, in a bear market because we broke the 200 average. So, we're not just like taking a breakout in isolation. We want to see like, well, how is that behaving in Bitcoin's history on its entirety? So I just think we got to be patient. There's going to be another leg down. And when that happens, we'll just the system will give the signal and we'll get aggressive and just reload into it. At that point, as well as traders, like you'll see a lot of my trades will be longs now instead of shorts because they've basically only been shorts mostly for a couple months since January, mid-January. So, but I can hear
Yeah,
you
I saw
now.
it in the history. I looked it up in it. If I'm just active, it's 2 weeks, but I looked up all trades, not all trades, but most of them or
Good.
some.
Yeah, I mean, I just appreciate you coming back with a lot of positive energy. You could see, like, if it wasn't for you in the channel, I feel like the spirits of everyone, the sentiment's pretty bad. Everyone's would like to be in a bull market. But and I used to be like that in my journey too. But I'm actually very excited about being patient and sidelined and being on the right side of the market and being ready for it. Because really, what we want to do to be consistently profitable is be able to make money in any type of market. We can short, we can sideline. We don't always have to make money when it's going up. So that's the message. Because I think this is going to be the buying opportunity of a lifetime, really. if we get a mega crash here, this could be the low, like lows of the next bull run where we maybe get to up to 200,000 in 4 years from now or something. Like, oh, we should have bought at that 40, 50 level that it got down to. And like, oh my god. So that's just how I'm thinking, is how to time
Yeah,
this.
I agree.
So yeah,
Yeah.
it's emotionally tough. I mean, I've had members almost be like the contraindicator. I've had family members call me right when it's breaking out, and that's usually a sign when my system is telling me the opposite of what the sentiment is, that there's an edge for us. And it's when this thing kind of turns on itself, you can see it's going to cause a lot of panic. Um, but we'll be ready for it. We're going to be alert, relaxed and alert because we're planning ahead. So what I'm going to do today is, I think today's really important. Like sometimes maybe not, certain daily calls at 8 o'clock are more important than others. So for me, and for everybody, the candle closes in slightly less than 3 hours. So really seeing how today closes could be important for the next couple of days, but it still doesn't invalidate that pattern. But I'll tell you, the quad exit's very useful because if I was trading, and I am, and I didn't take any profits on my short since yesterday, and I watched more than half of it retrace, I'd be freaking out right now. You're like, oh my god, but it's like I always say to myself, well, as day traders, like how often do you get nearly a 3% move and it just you don't get any kind of reversion to the mean? I mean, as day traders, we always have an opportunity to get in again if we're just patient. So, and that patience is really just what it is. Because like I said, you said you had some great shorts that you saw, but what was the reason that you didn't get in? Was it like psychological, or were you busy?
No, no, not busy. I would not say not busy to take the short. So as a rod, I do not have a full functional system like you do. This was based on I'm watching and I like, but I was not sure if it's enough. Just I know you're not an expert of the, but it can tell some edges in the long term. So this is for sure. But I am thinking about stacking edges to get here. Let's say a combination of can be more sure to take shorts or longs in this kind of markets. I mean, not every market with a COT report works with the COT report, but some of them.
Mm. Are you using
mostly commodities which are working very fine? Normally, gold, silver, sugar, copper works very fine. What does not work is mostly so QQQ, not very good on COT report, but
yeah, I mean,
this
whatever.
is some approach I very like is the interconnection of markets. So
Yeah.
that's the money. Can you hear me?
Yep.
Sorry. Okay.
I can hear you very
position
clearly.
of the big players, the big fours, were massive short in Europe.
Yeah, I mean it seems like you trade a lot of markets. Are you
This is all interconnected to the war.
Mhm.
And
Yeah, intermarket relations are huge, especially for the S&P.
And this is also interconnected to the Bitcoin because Bitcoin is also a reflection of the liquidity to the market. So this is a little different than your settings, but I'm not fully convinced about my thinkings here. So
well, it sounds like they're showing the same thing. That's good.
Yeah, yeah. Here they are interconnected. This might be a good combination of some long-term signals, I would say. So maybe we can switch to long when we see that everybody is the country reports also shows sign of toppings in a dollar. This might be maybe also the bottom of Bitcoin, maybe.
Yeah.
Because what I saw in
Oh, you got kind of cut
it
up.
was sniffing out this war maybe 2 years ahead of time.
Mm. Yeah, I mean, we
Are
need.
my thoughts here, but I know it's not your fully topic and you're not for this kind, but this is just another perspective. So
Well, many roads lead to Rome, and I do agree that we need some things to calm down geopolitically for things to markets to be really really flush. I mean, right now, I mean, there people worried about oil prices and bombing this and that. It's pretty chaotic over here. But I try not to get too involved in too many events, and I'm like, okay, well, there's going to be a lot of truth in these charts. That's why I can keep abreast of what's happening in the crypto world. Michael Saylor buying this hedge fund doing that, and I don't get swayed like, oh my god, everyone's buying. How come I'm not? I'm like, well, because my system in the charts are showing something else. I'm sure they were saying the same thing in the last bear market, how they were all buying. I remember, and it still kept, it still had to play itself out. Um, I mean, I am kind of concerned in terms of sense. I don't really like that there's one or two guys that are BlackRock and Michael Saylor that are buying all the Bitcoin up. You know, back in the day, it was a lot more decentralized, it seems. But you know,
yes. And did you about what he did with his extra shares? So I watched a little bit into the construction. Not really shares. I don't know how you call it in English, but it's very, very strange.
yeah, the MC, yeah, he basically gives out shares of paper based on his Bitcoin. So it's like fractional reserve shares. So the problem is what they do that is they always lend out more than they have. So if his
Yeah.
investors did, BlackRock did that recently, their investors called in like 10% of their liquidity. So what BlackRock's doing is they're taking people's investments and then they lend out the money. So they're basically like doing fractional reserve on their investments, which is insane. So when you see like this company is $1 trillion holding company, it's all based on nothing really because they're constantly inflating their balance by lending out stuff, and then God forbid their customers want it. Uh, that kind of created that's sort of can give you a heads up potentially that we're going to be in possibly another, like I said, a little bit more of a bear market here.
Yeah, this is also why I thinking about. So I told you my primitive around also shows a target of about 50K, 40K. So it's aligned with them. But I'm a little afraid that on some places and sometimes he is, then it's also possible to see much lower Bitcoin uh, prices like maybe 15K, 10K. So this is also a possibility. I'm not sure about how to handle this Six Sigma event.
Yeah, I mean,
So
it's
from my
I mean, it'd be wild to think that it could go back to the lows of the last cycle. I mean, my system doesn't have it going that far down, but it shows high odds. I
yeah,
can't predict that, but definitely has high odds uh, for another leg down, and then that maturation of that channel with the red portion of the Gaussian channel to show a bear for a while. Um, and, all that channel does, it really can kind of calm your emotions. That Gaussian channel, if you zoomed out to the entirety of Bitcoin's history, it just calms your emotions because you just see how this thing behaves. And you're like, well, I certainly don't want to bet on the anomaly, even though it feels like it's going to go up. I don't think I should reload right now. Because I mean, if God forbid you reloaded yesterday on the breakout attempt, and then you're down. from like a 75 up, got to like 68 something. That's a significant drop. It's gonna, you know, scare a lot of folks that are maybe reloading now. But I mean,
Yeah.
everything is going to be an opportunity. There's always the opportunity cycles, and that's when you can shift and we'll get aggressive. And I'm just preparing myself. Like I'm like, this is going to be a very, really an amazing opportunity. So, the patience will pay off. The high idea when altcoins
So
start moving again, that's a whole other story, but we definitely need Bitcoin to get a bottom first if alts are going to have a chance.
oh well, when I have the feeling that we are really close to the bottom, I thought about allocate to some of my favorite altcoins, and I also thought about some catching bits on the exchanges just in the case of a liquidation event. But I did not put it in right now. So, but I'm thinking about it.
Yeah, that's probably smart. Very risky, but if we do get a proper bull run, we really didn't have that crazy alt run, and maybe
Yeah,
in
yeah,
this you
yes.
might get that. I mean, so many coins they never got to their old evaluations.
I think, yeah, with other coins than the top coins, it's always the issue of the trapped money. So do you have a lot of trapped money which just stays in the coins because the losses are so high, and when they reach their buying high volume notes, then it's game over. Then it's gonna blow up again.
Yeah,
So
I
I
mean,
saw this a lot on I think IOTA.
mhm.
So this is a perfect example. I don't know if you know this coin, but
I've heard of it.
it
Yeah,
was it was hyped 2017, 18, I think.
I actually used to
And
follow.
yeah, and now it's so much trapped monies, and you have so much high volume nodes down to the alpha
Yeah, there's just a
from
bunch
that.
of people
That's not
waiting to
possible.
sell.
But if you detect newer coins or some with real use case, 10 or 100 beggars, this is still
Yeah,
possible, I think.
it's tough. I think the one coin they're going to do well. I'm not sure which one it's going to be because there's a couple different competitors, but it's the coins that are going to like tokenize the stock market, like Ondo or one of those coins that are going to help facilitate the tokenization of like the S&P. I mean, I don't see how those coins are not going to be flying off the shelves.
Yeah, and I thought if I have if I have the feeling we reach the bottom, then put 1 or 2K in this really small shit coins where you think the alignment will be, and then this is just like fire and forget.
Well, if
Stop,
history repeats itself,
just
we might get it.
yeah. So it's like like putting $100 in the Shiba coin.
Yeah. God, I wish I only put
Which
$100. I had a gambling tendency during certain bull phases, and I was misled. That's
yeah,
why
the
this
Shiba
system's
coin,
great.
if you yeah, if you put I think $100 in the Shiba coin, then it moved up to 10 million. So before the pump.
Oh,
So this was
wow.
quite funny.
Yeah, people heard. I mean, you hear about those stories. I thought
But
that was going to happen to me.
yeah,
You start to hope, like, oh my God, I hope I get that, and then you realize, like, well, I'm betting on the mathematical lowest odds thing. And I guess if you do, just bet small.
yeah.
You know, I mean, I am hoping for an alt flip.
Yes,
I
just
got a lot invested in it. We didn't really get what we had hoped. I mean, but if it does, I mean, I'll cover the tau, the theta, the SWE, all that stuff. So the Ethereum's.
yeah.
think SWE will do well. Say might do well. I mean, SWE did make it to $5. It's like around a dollar, 95 cents today. So, um, but I have to
Do
see.
you one off-topic question? Do you want to switch your computer and try out if the connection is better on another computer?
Um,
Just
yeah,
no.
no, I'm good because I'd have to cut, I have to cut this meeting. Actually, you know what I could do? I don't have to shut down the meeting. I just go over here.
We can also try out tomorrow if you want to. That's not an issue.
Actually, it could just take 2 seconds because if I'm opening it now, oh, I said new meeting. I should have said
Okay.
join. Let's see. Let me see if I can join it. Oh, wait. Let's see. Join new meeting. Okay, you have a meeting that is currently in progress. Please end it to start a new one. No, I don't want to end it. Maybe I join it. See if I can join it. I'm not sure how to do that. Yeah, but we'll do it next time. I know this one usually works.
All right.
Oh, I could switch it. I just switched it. I knew I could do that. So now it should be coming over here.